Well, the fears from Wall Street started Friday with the jobs report, which sent investors into a spiral. Then today, Japan closing the market with the worst crash since 1987. And the American Dow opened down nearly 1,000 points at market open, concerning economists around the world. Reporter Lee Waldman with CNN in New York joins us now. And Lee, it was a really tough day for the markets, but they say this was not a crash. So what's the difference between a bad day and a market crash?
Yolanda, Angela, good to be with you both. So we asked the economist we spoke with today about this, and he compared it to a rubber band. You can only pull on a rubber band so much before it's forced to snap back. That's what we're experiencing now. A crash would be when that rubber band breaks completely. Now, what we're experiencing right now is not as significant as what we've seen historically in the past. Let's look back 4 years ago, March 2020. Back then, the Dow dipped nearly 3,000 points. That is a decline of almost 13%. But what we saw today and even back in 2020 was nothing compared to Black Monday in October of 1987, when the Dow fell almost 23% in a single session.
Lee, let me ask you, what does all of this mean then for the everyday person and their wallet? Because we're all looking really closely.
That's a great question. It's one that we asked as well. What does this mean for all of us? And the main takeaway from that analyst that we spoke to was, even with all of this craziness happening with the stock market, don't ever act out of fear or out of panic. Take a rational approach to your finances. And that includes anticipating if we're going to experience a pullback like we saw today. It's also important to assess how much risk that you can tolerate or any kind of downturn in that market.
Good advice given the negatives that we're all seeing in our investment portfolios. But Lee Waldman, thank you so much for joining us from New York with that advice.